Hello, listeners. Welcome to our podcast on the financial market and the banking sector. We have Mr. Aashay Choksey, Vice President and Sector Head Financial Sector Ratings, and Mr. Rahul Agrawal, Senior Economist at ICRA. So, Aashay, starting with you, just wanted to understand what is the outlook for the bond issuances and the credit growth in FY 2024?
Bond issuances during the first quarter this year touched nearly 2.7 trillion rupees. This comes at the heels of financial year 2023, wherein bond issuances recorded their highest volumes for any year at 8.7 trillion rupees. Bond markets are expected to remain competitively priced vis-a-vis bank funding, which would underpin both issuer and investor sentiments and sustain buoyancy in bond markets. Accordingly, we expect fresh bond volumes to surpass previous year highs to 9 to 9.5 trillion rupees in financial year 2024. Furthermore, incremental non-food bank credit expansion surged to 7.1 trillion rupees in the first quarter of financial year 2024. However, a large part of this increase was on account of balance sheet management by banks in the last fortnight of the quarter, which subsequently reversed out. However, aside from the quarter-end phenomenon, credit expansion remains strong despite the record external commercial borrowings totaling nearly $20.7 billion and strong corporate bond issuances. We expect credit growth momentum to remain strong with incremental credit expansion at 16.5 to 18 trillion rupees this year, translating to a year-on-year growth of 12.1 to 13.2%. At these levels, absolute credit expansion would still be lower than record expansion seen last year at rupees 18.2 trillion rupees.
Thank you, Aashay, for sharing this valuable insights with us. Rahul, I actually wanted to just understand what will be the outlook for the monetary policy and also what will be the liquidity conditions expected.
In terms of the monetary policy outlook, ICRA expects the repo rate and the policy stance to remain unchanged in the August 2023 monetary policy meeting. The recent vegetable price shock is expected to lead to an upward revision in the MPC's Q2 FY24 CPI inflation projection. This, along with the increased uncertainty around the near-term food inflation outlook, is likely to manifest into an increased hawkishness in the MPC's commentary. Given the transient nature of shocks in food items, particularly in some vegetables, our base case is that a status quo on rates is likely through FY24, with the earliest rate cut foreseen only in the June 2024 policy review meeting. However, if the CPI inflation appears set to materially overshoot the MPC's projections for 2 quarters, led by a generalization of food price pressures, then a rate hike cannot be ruled out. On the liquidity front, systemic liquidity has sustained in the surplus mode through FY24 so far, in contrast with the fluctuations between deficits and surpluses that were seen during H2 FY23. This has been aided by the decline in the currency with the public on account of the 2000 rupee note withdrawal and dollar purchases by the RBI. Going ahead, a liquidity deficit may re-emerge at the end of Q2 FY24 amid the advanced tax outflows. The RBI is likely to continue with VRRs over the next few months, although the frequency of the same might reduce. However, a decline in liquidity surplus in H2 FY24 amid the onset of the busy season could lead to a shift to VRRs as the primary liquidity management tool.
Thank you, Rahul. I think so. This really gives us a deep understanding on what are the expectations from ICRA on the MPC and as well as the liquidity conditions. Also, Aashay, really thank you so much for sharing this, sharing information with us with regards to the bond issuances and the credit growth in FY 2024. Also, we would really like to thank our listeners. We will request you guys to please stay tuned for our upcoming podcast. Thank you.